Hi, this is Elliot Eisenberg of Graphs and Laughs, here to catch you up to date on the latest in residential sales data for both Hillsborough and Pasco counties. And what can I tell you? It's a story of inventory. There really isn't anything out there. I've said that month after month after month for a long time, but now I really mean it. This is now microscopically low levels of inventory across both counties for both types of units. They're at record lows or near record lows. If you look at the total number of units out there, it's ridiculously low. If you look at median time to contract, it's ridiculously low. You look at months of inventory out there, it's ridiculously low. We enter the spring selling season with less inventory than we've ever had before. It's going to be a tight season. Prices will continue to rise. Buyers had better beware. If we now focus on other data, local data, in addition to the inventory numbers, pending sales data are down a little bit. They're in down by the low teens, but that's not surprising. I mean, think about it. There's really nothing to buy, and prices are way up, and we'll talk about that soon. If you look at actual sales data, it's pretty good. Yes, it's down, flat to down compared to a year ago, but a year ago we were in the frenzy of COVID. If we look at 2 years ago data before COVID or 3 years ago data before COVID, we're flat or better than that. So this is really a strong market. The only reason it's not stronger is there's less inventory, prices are higher, and we're comparing to a year ago when things were really, really, really strong. If we look at the percent of list price received, it's at 100%. And that's fascinating because the prices are up 30% just about across the board in both counties for both types of property. There's one exception, but very few sales. So I'm not sure exactly what's going on there. It's still up 10%. But the price increases are strong, telling us the reason sales and pending sales are down is not because of lack of buyer demand, it's lack of supply out there. If we now turn our attention nationally and internationally, Q1's not going to be a good quarter. The first month or so of Q1, or first month and a half of Q1 was hurt badly because of Omicron, and the last month of Q1 was badly hurt because of the Russian invasion of Ukraine. If we add this together, Q1 GDP growth is going to wind up at something less than 1%, a very disappointing quarter. Overall, for the year, GDP growth is probably going to end up in the 2.5% to 3% range. Prior to the Russian invasion of Ukraine, I would have said 3.5% to 4%. So it's a full percentage point down from what it otherwise would have been, which is unfortunate. Fortunately for us here in the US and around the world, Omicron's gone. The problem is now we have DELTACRON, a new variant of Delta and Omicron. And while it's not going to have much of an effect here in the US because so many Americans got Delta or got Omicron or have had 2 shots and have been boosted, it will have impacts elsewhere. For example, Hong Kong and China. Hong Kong is now the epicenter of the coronavirus. Total deaths are quite high. If China ends up closing down their country or parts of the country, which they're doing, that can have reverberations into supply chains and adversely affect inflation and so on. It bears watching as we go forward. As a result of the Russian invasion of Ukraine, inflation is worse than it was a month ago or 2 months ago. It's worse because energy prices are up, industrial metals like nickel, platinum, palladium, copper, and aluminum are up, and the price of cereals, corn and wheat are up. As a result of that, the Fed's going to raise rates. The Fed raised rates middle of the month of March, and they're going to raise rates every 6 weeks when they meet between now and the end of the year. That means 6 increases, maybe it's only 5 increases, each of a quarter point. That's a lot of rate hikes, but the impact of short rate rises is not uniform, is not direct to long-term rates. Long-term rates have already gone up a lot because the Fed has said they're going to raise rates and because inflation's bad. So I don't expect long-term rates to go up much more. Maybe they end the year somewhere between 4.25% and 4.5%, but the vast majority of the increase in long-term rates has already taken place. That could change if inflation gets meaningfully worse than it is. That's all for now. I look forward to seeing you next month.